Thanks for clicking! Canadian interest rates are plunging on fears of new AI technology coming out of China, as investors pull their money out of the stock market, seeking safety in U.S. Treasuries, sending yields and interest rates lower.
Thank you so much. Thank you so much.
But the new AI technology, DeepSeek, has investors concerned about AI investments, mainly that the new Chinese AI chatbot will provide similar functionality to those developed here in the West, but at a fraction of the price. And while AI technology and the stock market aren't really the focus of this channel, though we'll briefly go over it in a minute, the plunge in yields that are stemming therefrom definitely is. And this plunge in yields points to something that we've talked about so many times before on this channel, the unpredictability of interest rates. So what I want to do today is briefly go over what's going on with DeepSeek, take a look at how this is translating into lower interest rates here in Canada, and then discuss some implications. We do have a big week ahead of us on this channel, with the Bank of Canada set to make its interest rate announcement on Wednesday, along with a press conference held thereafter. And we'll obviously have an update out on both on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into DeepSeek. On to DeepSeek. First off, in brief, what exactly is it? Well, the long and short is that it's a Chinese-made ChatGPT, which has already taken over ChatGPT as the #1 download on the App Store.
How the f*** you do that?
Yeah, it's a reasonable question, especially since the United States has taken multiple steps to block China from being able to import the chips that you need to make AI work. But China has found a way, it seems, and it's doing so on the cheap. While the original ChatGPT cost investors a fortune to make, the latest iteration of DeepSeek, Chinese-made AI, only cost $5.6 million, with the company saying it was able to use previous generation chips, previous generation technology to make the system work. So, very simply, if you believe China and the representations, which obviously not everyone will, but no one has any conclusive evidence one way or the other.
I do.
But if you believe China, then it does appear as though they've been able to get AI to work, and as such, if that's the case, then our tech companies aren't worth nearly what we thought they were, and are losing billions in the stock market. And with all that money being pulled out of the stock market, with the Nasdaq down 3 to 4% as of the recording of this video, that money is now pouring into U.S. Treasuries, to U.S. debt, to U.S. Treasury Bonds, as a safe haven asset. So when there's uncertainty in the market, when investors have a glut of money, the money goes somewhere safe, and U.S. Treasuries, for now, are seen as the safest asset in the world, so all that money is pouring in to buy U.S. Treasury bonds. Now, remember, as we've talked about before on this channel, the price of a bond and its yield are inverted. So if I buy a bond for $100 and that bond is going to pay out $105 at maturity, I am yielding 5% on that bond. But let's say that some investor pulled all of their money out of the stock market, needs a safe place to put it, so they buy my bond from me for $103. They're still going to get that 105 at maturity, but since they paid 103, their yield is going to be less. They're only yielding about 1.9%. And that's what's happening right now with U.S. Treasuries. A whole bunch of investors have pulled their money out of the AI trade, have pulled their money out of AI stocks, and are buying up U.S. Treasuries, bidding up the price, sending yields down. At the time of this recording, U.S. Treasury yields on the 10-year are down about 12 basis points since Friday, down to their lowest level since the beginning of January. And of course, as it always does, what happens in the U.S. very much affects us here, and as such, the yields on the 5-year Government of Canada bonds are plunging as well. Now, this hasn't translated into a drop in fixed mortgage rates as of yet, as it usually takes a week or so for the banks to pass on those savings to the consumer while they wait to see if this trade is going to be permanent.
If you don't have my money for me, I'll crack you.
But if this trade continues, if this trade catches on, if we continue to see money pulled out of the stock market, then I would think that within a week we'll start to see these lower yields be translated into lower mortgage rates. Though that's not to say that yields won't move back up if inflation continues to remain stickier than investors than the market had previously thought, but that's a video for another time. So in summary, China comes out with this new AI platform surprising investors throughout the world, as they weren't supposed to A, have this technology, or B, be able to do it this cheap. As such, it's now looking, at least, more and more like our own AI stocks, Nvidia, etc., are overvalued if China can do it this cheap. Thus, we have money being pulled out of the stock market, going into U.S. Treasuries, pushing up their price, and pushing down yields, which is translating into lower interest rates. And given this quickly unfolding process, I think there's a few implications stemming from this admittedly unexpected process. First and foremost, I think very few saw this coming.
I did.
But very few saw this coming, meaning even fewer know how this is going to play out. So, if this continues, if we continue to see the AI trade unravel, if it turns out that AI is currently in bubble territory, then we could continue to see the prices of these stocks fall and treasury yields fall right along with them as that money moves into safer assets. Or it could not. It was only 2 weeks ago that the yield on the 10-year treasury was heading to 5%, on worries that Trump's tariffs and tax policies could reignite inflation, which could still be the case, though I'll address those implications in a minute. The point is, though, is that interest rates move for any one of thousands of different reasons.
What's going to happen to us?
So, if you are thinking about buying, if you are thinking about moving into the real estate market, don't try to predict the path of interest rates. At least don't make interest rates your sole reason for buying or not. Buy what you can afford and buy what will let you sleep at night. Second, and let me be clear, this is pure speculation, but I think that this episode, that the unexpected nature of this whole process, points to the current economic uncertainty under which we currently live. As I was following the events unfold over the weekend where President Trump imposed 25% tariffs on Colombia then retaliated only to later back down, and Trump held off on those tariffs, my initial instinct was to think that wasn't great for Canada, as the more that Trump sees those tariffs working to achieve policy ends, the more likely he is going to be to use them. But then this happened, and we also know from Trump 1.0 that Trump looks to the stock market as an indicator of economic success. In news that developments coming out of China has sent US stocks plunging, I'm sure is not going to be received overly well. So maybe, just maybe, this could help draw some focus from Canada.
Squirrel!
Maybe it could draw focus, create a distraction, and Trump could start looking to the east for threats to U.S. economic security rather than to its neighbor in the north. So, a big surprise to the markets today coming out of China with this new, apparently cheaper AI technology set to challenge Western hegemony in the AI space. This has investors concerned, pulling money out of the stock market, pulling money out of the AI trade, dumping it into U.S. treasuries, which is sending the price of those treasuries and their yields downward, translating into lower yields here in Canada, which can, and if this continues will, make its way into lower mortgage rates. We will obviously continue to track these pressures on Canada's interest rates on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.